What's up, guys? Welcome back to Road to the 2 Comic Club, and in today's video we're going to just be looking at some stocks and talking about what's happening ever since we had a really huge historic day today. I think it was probably one of the best days I've ever seen in terms of how well the Dow did in the NASDAQ. Let me see if I can find it real quick. Yeah, right here. Oh, come on. Okay, so the Dow went up 401 points, 1.63%. And the NASDAQ went up 209 points. I think this is the highest I've ever seen it go in one day. So that is just incredible. But I'm going to start with Amazon just to kind of talk about what's happening. So, the huge rally today, everyone was saying if Amazon can report good earnings, this rally can continue. And of course, they didn't. I still think their earnings weren't that bad. This is the thing. The standards are so high now that even if they have like record profits, if like one or two things is not like amazing, it's enough to send the stock tumbling. And especially with the uncertainty, I think if this same thing happened a year ago, I don't think the stock would be tumbling this much. I think it's just because of how much uncertainty there is with the global markets and everything else. It's just the market's really finicky. It's really shaky. Any sort of bad news can just trigger like a really overreaction either on the upside or the downside. That's why it's so volatile right now. And yeah, so Amazon is down 132 points after hours, and they're probably going to go down more tomorrow. And I'm still stuck with that call that I was talking about, a few videos ago. And so I'm going to take a big hit, and I'm contemplating selling it just because of the uncertainty. Maybe it can go down more. But however, their profits are going up more. I feel like, their PE ratio is lower than it was earlier this year. And, even at this level at 1650, I think it's a good buy. But based on all the uncertainty and all the crap with the midterm elections, I could see it going down more. And so I might be selling. It's just hard because every time I sell, it goes right back up. So I have such bad, post-traumatic stress disorder when it comes to that. Every time I sell it, it seems to go up and I kick myself. So I'm not 100% fully decided yet on what I'm going to do with my Amazon call because I still have until I believe 2021 to see where it goes. And so, I may write it out, but I'm not sure. It's just really tough to make a decision at this point. Now, here's an article that I will link to in the description. But it says record profit cannot save Amazon from the stock downturn. And again, record profits, once upon a time, that would be amazing in and of itself. And that would have been enough to make the stock go up. But the standards are so high now and the market uncertainty, it's just too much. Any little thing can trip up anything. So Amazon reported third quarter profit of $2.9 billion. That's in one quarter. Like, to make that profit in a quarter is just nuts. And the fact that they were able to do that, and it says easily topping a quarterly record set just 3 months earlier. You think that's awesome. They broke a record. You think that would be like amazing. But nope, it's not, because their forecast of fourth quarter, the all-important holiday shopping quarter, is a little bit lower than, expectations. So that's enough to make everyone sell and the total world to end. So, I think that's stupid. I don't think the world's going to end when something like this happens, when they're recording record profits and just slightly being conservative on their forecast. But, that's just my opinion. I'm not a financial advisor. But anyways, yeah, I'll link to, you can read more of this. There's more really good information on here. Now, one of the things that, let's see, I'm trying to think of, I think it's the next article about Google. So yeah, let's talk about Google. So their earnings were also, to make matters worse, their earnings were not great, and they're down after hours. And so that happens as well, and that's not good. Even though Google's like one of the biggest companies on the planet, it sucks when they don't knock it out of the park, apparently. So I have a couple things highlighted. It says right here, after the company reported better than expected profits. You'd think that'd be enough to kind of help their stock do well, but nope, it's not, because they missed the revenue projections. I think, when you set the bar so high, you're bound to fail and not hit it. So that's what happened with here. Another thing I wanted to kind of talk about here is this thing caught my eye. It says a lot of their profits were related to its investments, and it said the company it added $1.38 billion to the bottom line because of gains in equity securities. So they're taking some of their extra money and investing it in stocks or whatever, and they're making a profit, I think that's a good thing. And it says a change in accounting standards earlier this year triggered these types of disclosures. So that is something I haven't researched, but I am going to be clicking this link and reading into that. But I'll link to this article so you can have a look. But maybe, I guess something that companies didn't have to disclose what they're investing in. Maybe they do now. I'm not 100% sure. But anyways, I'm just trying to stick to the general theme of this video. This company, Google, did not report stellar earnings, and so they're down after hours. And because of that, because Amazon and Google reported not so great earnings, actually, wait, real quick, before I talk about what happened, I did have one more thing highlighted in this article I wanted to mention. It says, beyond disclosing what cash comes from Google sites, such as Google Search and Gmail and its network, the company doesn't break out more information. For example, analysts say that YouTube is a multi-billion-dollar business, but the company does not report its actual size. I thought that was very, very strange, and it really makes me question and wonder, why don't they mention that? I don't know if they're waiting for a specific time to just because remember when Amazon did not report how many Prime subscribers they had, and all of a sudden they did, and then their stock just jumped like crazy when they said they had 100 million subscribers. I don't know why they all of a sudden decided to, I forget why they all of a sudden decided to disclose that information, but they did after many, many years of not disclosing it. And so with Google, again, I don't know why they aren't disclosing it, but if they did and talk about how much money they are actually making from them, that could be really, really huge. Unless on the other token, maybe YouTube is not doing very well ever since that adpocalypse whole thing happened where a lot of advertisers were pulling their money away. Maybe they don't want to tell people how much their money making from YouTube is because maybe they're just not making that much. Okay, so I just wanted to throw that in there. But okay, so again, like I was saying, because Amazon and Google did not report such good earnings, just because of them, those two specifically, well, mostly those two, it is messing up everyone else. So, whoops, let me minimize this. Here is 4 companies that I'm investing in, and you can see every single one down after hours. You have Tesla, down after hours, down $3.94 or 64 cents. You have Universal Display, down after hours. Canopy Growth, down after hours. Nvidia, down after hours. They're not down because of anything they did. They're down because of Amazon and Google. And that's literally it. And it's so annoying. It's just super annoying that because Amazon went down, you're going to sell everything else. That's what people are doing. It could just be algorithm trading that's doing it, but I think it's just people are so scared. They're on a hair trigger to sell at any given moment. If any piece of bad news, they're freaking out, and the freak out level is just nuts right now. And it's really annoying because people like me who knows that the companies are strong and they're going to do well, who like to hold, it's just hard to stomach all these losses. Because yesterday we had one of our biggest losses of the year. We lost 23 grand yesterday. Made most of that back today. Almost broke a record for a one-day gain, but tomorrow we're going to lose more of it again. So it just sucks. I don't know what else to say. It sucks. Okay, so let's go into the next article. Let's see, what is this? Now this article, a Wall Street analyst who called this stock market rout sees another nasty drop for the S&P 500. So, another analyst is predicting it's going to fall in the coming weeks. So you have analysts on both sides of the fence saying the stock market is going to do bad. Some are saying it's going to do good. But I think enough people are saying it's going to do bad that it's just making everyone uneasy. And so here is, again, how the stocks did. And let's see. I want to go to the next tab. So I'm going to show you guys this chart right here is, I don't know why it keeps doing this, but this is the chart for the Dow Jones Industrial Average. And this line here is the 200-day moving average, which if you're new to kind of investing, this is a very important line that people look at, especially chart traders who trade based on technical analysis. The 200-day moving average is kind of like the last line of defense. If stocks, like a company stock or the general Dow Jones index, falls below it and can't go above it, some firms will say if it can't really fight back above it in 12 months, we're officially in a bear market. And I think some people would say it's even less time. But when you break below that, that's not good. And you're really trying to look to go above it as quickly as possible. And then you can see right here, this was that huge rally in January of this year. This is our best month ever in investing in anything. And then you can see how it kind of quickly fell back down. In February, we had that huge correction, but it still held above it. And then in July, right around here, June, like late June, early July, we fell below it for the first time, it looked like this year. And then, but we came right back above it. So it was a good support line for us. And, you know, we started doing very well again back in the summer, and then September, October, and then we are starting to fall down again. Now, a lot of times, the stock market goes down in midterm elections. So this brings me to my next point. Because we have a midterm election coming up, historically speaking, most times, I think almost every time, the stocks tend to do bad. And let me see if I can. So here's this. Take a look at this chart because it is really telling, I think. Hopefully you guys can see this. I'm going to try to zoom in a little bit. Okay, so right here, this chart shows how the market performs before the midterm election and then the year after the midterm election. So these blue bars here are how the S&P 500 index historically has corrected right before the midterm. So you can see every single time, from 1962 all the way to 2014, every single midterm election, it did bad. We kind of corrected. And then every single time, 100% of the time, a year later, the stocks did very well. So you can see from a probability standpoint, we could be doing very well after the midterm election. Even 9%, I think, would be amazing. Okay, because if the general market goes up 9%, everyone's going to make money, and I think that is a good thing. Now, here's where it gets interesting. This particular midterm election, we have, I would probably say, one of the most different types of presidents we've ever had. I mean, Donald Trump, many people would say, is very different from all the presidents we've had leading up until now. And he's been stirring up things so much that a lot of people are saying that even this chart might not save us this time around. We could still not have a rally after the midterm election. And some analysts are saying that we already had the rally ahead of time. And that, so this article says, Stocks and Elections, Why the Conventional Wisdom Might Be Wrong in 2018. This article is saying that we might have pulled the rally in front of the election this time, and now we might not see it. So this person here, and again, there's always analysts on both sides of the fence, which is kind of annoying, but this guy, Ryan Detrick, he's a senior market strategist at LPL Research. He said, once uncertainty is resolved in November, solid fundamentals and favorable seasonality could take over for a nice year-end rally. Oh, come on. Go away. Go away. Okay. And now this other guy, Goldman's Costin, he is basically arguing a point to the contrary and says, the unusual current political environment makes typical market patterns around midterm elections less reliable than might otherwise be the case. And you know what? I mean, he kind of brings up a good point. We have had a very, very different political climate this time around with Donald Trump, you know, trying to lower taxes a lot, starting a trade disagreement. I don't like to use the word trade war. It's just a trade disagreement argument with China. And there's just so much going on now that just so much uncertainty going on right now, even despite the economy doing very well. It leads me to believe that we might not do that well after the midterm election. I'm 52%. So here's where I think we're like 52% chance. This is just me, my personal non-financial advisor opinion. I think we're about 52% chance of having a rally after the midterm election and a 48% chance not having it. And so, you know, I think in any other point in time at a midterm election, I'd be much more confident with a rally. But this time, I'm just not that confident. I mean, it'd be hard to break that pattern, though. I mean, you saw the chart. Every single midterm election, we did well afterwards, every single time. But this could, you know, if there is a time that we don't, this could be the time. So here's a list of all S&P 500 companies. I'm going to end this video by talking about one thing I did see on TV today on CNBC. One of the analysts was saying he noticed from his research that he was looking at the 40-day moving averages for the S&P 500 stocks. So here's an example. This is Activision Blizzard. You can see up here in the top left. That's their symbol. And this line here is the 40-day moving average. Now he said, obviously a 40-day moving average isn't really enough to make, you know, really sound decisions. However, he said About 90% of the S&P 500 companies are trading below the 40-day moving average. So you can see Activision right now, trading below the 40-day moving average. Here is another chart, Adobe. Okay, here's Adobe, also trading below the 40-day moving average. Here is Intel, also trading below the 40-day moving average. Now what he said was, normally this wouldn't be, just in isolation, a stock trading below a 40-day moving average. That can happen at any point in time, even in bull markets. But he said when 90% of the companies are trading below the 40-day moving average, he said it acts like a rubber band and just kind of snaps companies back above the 40-day moving average. He says almost every single time, pretty much every single time, that's what happens when that many companies are trading below. So that's kind of a good news for me, because I think if he's right, then we could see a little bit of a rally coming up. So, it sucks because no one can predict the future. So it comes down to what your risk tolerance is and what you want to do. I personally, in terms of what I'm going to be doing, it's really tough. I don't want to sell every company I'm invested in, like all of these you see here. I love these companies. I don't want to get rid of them. However, I don't want to lose tens of thousands of dollars because of the midterm election and all this political uncertainty. So my plan is I might be, depending on how bad tomorrow's market is, if it's looking like it's going to be crappy again, I might start selling some things and maybe moving some more into stocks. I think if I were to hold onto anything right now, it would be Tesla. To be honest, I think Tesla would be like the one company I would hold onto my options for. And even Amazon, I still like Amazon. Like, they're such a beast of a company. And Nvidia, I still love them. Like, and Apple. Apple's probably has been the most solid performer in this crazy volatile market that we've had. I don't have it on here, sorry, but Apple, if you look at your Apple charts on your phones or on the internet, whatever, it has just been so solid, so solid. If I just invested in Apple this year, I'd be up a lot of money. So it just kind of goes to show you there's still companies that can still hold their own in these crazy times. And I think if I had to pick my top three that I'd be holding in a volatile market, even though Tesla is probably a horrible idea, I still believe in Tesla the most in terms of their vision. So it would be like Tesla, Amazon, and Apple would probably be my top three. So yeah, so we're going to leave it at that. Hope you guys like this video. And again, to kind of summarize, midterm elections generally have a correction. They tend to rally. However, this time is different because of all the craziness that's going on right now. So it's up to you on how you want to play it, how I am playing it. I'm going to be very cautious. I'm going to see what happens tomorrow. And if it looks like we might be due for another crap show, sell off, I might start selling some things and maybe buying puts just to protect myself until after the election. If things start to rally again, I will quickly get back into positions and hopefully make some profits. So there you guys go. Hope you guys have a good night and hope you guys don't lose too much money tomorrow. Crossing my fingers for everybody. Comment below if you have any opinions about this video, and please like if you like it and subscribe if you haven't already, and hope you guys have a good night, and we'll see you tomorrow.